Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains, and today we're talking Lululemon and diving into the company and the stock's future after the yoga and athleisure firm reported their third quarter earnings results late last week. But before we do any of that, I want to say, remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com, and also make sure to subscribe wherever you listen to your podcasts. So the athleisure retailer, Lululemon, moved their quarterly earnings last week from Wednesday to Thursday because the markets were closed to observe a day of mourning for President George H.W. Bush, who passed away. So it got delayed one day, so they reported last Thursday after the closing bell. So right off the bat, we should note that shares of Lululemon then plummeted 13% during regular trading on Friday to around $114 a share. So what we need to know is, did that have something to do with the broader market falling huge on Friday? Or was that just Lululemon's showing signs of maybe they're going to decline? Or was it just investors simply taking in some of their gains up to this point because the stock had been up huge for some period of time? But we'll get into all of that and speculate on what exactly caused that sell-off. So right off the bat, in terms of their top and bottom line performance, it didn't look too terrible. Lululemon posted an adjusted quarterly earnings of 75 cents per share, which marked a roughly 40% surge from the year-ago period. And this also topped our Zacks consensus estimate of 69 cents per share. So far, so good. Some people might have gotten a little nervous that they compared Lululemon's third quarter earnings growth to the massive 90% surge in the second quarter, but the second quarter earnings were actually lower than the third quarter earnings. They came in at 71 cents per share. So that was really just reflected on lower Q2 of 2017 earnings. So nothing really bad going on with earnings there. And then in terms of their top line, the company's revenues jumped 21% to hit $747.7 million, which also came in well above our estimate. So once again, nothing scary there. It was a little bit lower growth than the first and second quarters of this year, where the company saw its revenues jump 25%, so down 4% compared to the previous two quarters of this year. But at this point, it doesn't seem like those top and bottom line figures would lead to a 13% drop off on the Friday after they reported their earnings. So now let's get into some of the details to see maybe if we can figure out what exactly is going on. So on top of that, Lululemon's gross profits jumped 26% to roughly $407 million, which is good. Their gross margin hit 54.4%, up 2.4% from the year ago quarter. Meanwhile, total comparable sales jumped 18%, which came in well above analysts that were calling for roughly 14% climb. So a good beat there and a good overall comps growth. And then more specifically, their in-store comps were up 7%, which is pretty solid. And then their e-commerce comps surged 46%. And that's after they jumped 47% in the second quarter. So all pretty good news right there. And then Lululemon had 30% increase in e-commerce traffic, which then likely means that they're pulling more money out of each seller because their e-commerce comps growth jumped 46%. And this was pointed out in the fact that on the company's earnings call, their management noted that their outerwear sales have done really well. So their jackets. So just for reference, this is a newer line, a newer set of offerings that the yoga and athleisure company is rolling out, and they are selling men's and women's parkas and other heavier jackets. They're selling a men's parka for just under $600, which is a little less than the $1,000 to $1,500 that Canada Goose is charging, with some of their other jackets at Lululemon costing around $200 as well. So this is a new growth area that investors can hope will continue to pay off going forward, as it seems like the company has a pretty loyal customer base. And then just for reference, on the earnings call, this is going to be just a quote from the chief product officer. We see our outerwear being a material comp driver for the quarter, both across men's and women's. And so far, we really have not seen price resistance, where we've introduced the 3-in-1 or waterproof down and priced it at a premium. So we believe that continuing to innovate on solutions for our guests, and there's value there. And then they even said that they see them pushing up the prices of these jackets going forward. So that's good news for investors, as these huge ticket items would be pretty good going forward. And for reference, the men's joggers and the women's yoga pants that kind of made Lululemon famous run for about $120 or so, to as much as $150, with some coming in around $98 as well. So it's not like it's a cheap store to begin with. And then I also wanted to mention just their store count, give a little bit of an idea of how big the company has gotten. So it added 9 stores in the quarter. It closed the quarter with 426 stores. It had 450. Oh, so they added 11 stores. They had 415 last quarter. Most of them are in North America, but I'm actually going to pull up their store locator right now, because they are actively trying to expand in Asia. So most of their stores at this point are, like I said, are in North America. Then they have stores in Western Europe as well, and then 2 locations in the Middle East. And then also they are opening heavily in China. They just opened a new store in Japan, and they're actively opening stores in South Korea as well. So they have locations all over China, in Shanghai, Beijing, Hong Kong. They have stores in Tokyo, Japan, and in Seoul, Korea as well. Then also they are pretty heavily in the Australian and New Zealand market. So I was just looking at their store map. So now I want to dive into a little bit of the details from Asia. So you had their Asian sales grow 61%, which was up from the second quarter's 50%. So that's really good growth there. And then, as I mentioned, they opened up a new store in Japan. And it's really important to know and remember that for those that aren't really locked into the fashion world, that Asia, and specifically Shanghai and Beijing and Tokyo, are fashion hubs that then set off trends kind of either throughout the rest of Asia and sometimes the rest of the world. So it's good to see that Lululemon is actively trying to expand in those key markets. And then more specifically, the company said its Chinese e-commerce business grew 76%, with a 2-year increase of over 200%. They also noted that their sales did really well on Alibaba's Tmall, with their Alibaba Singles Day, which is kind of like a big one-day sale that Amazon runs, like Amazon Prime Day, did really well. And then on top of that, they saw 50% growth in Europe, Middle East, and Africa. That's one market that lots of retail companies lump together. And then another key factor, and something that you could see being very huge and important for the company going forward, is that they're rolling out a loyalty program. Lululemon is charging customers in one of their pilot markets $128 for an annual fee. This includes either a pair of pants or shorts, which they say is designed exclusively for members of this program. And then it also offers people that pay this fee the ability to attend some curated events, workout classes, and then offer free expedited shipping as well. So around $130, that's a good way to keep people as loyal customers. We'll see how it goes going forward, but so far the reception has been good enough that they're expanding it. So the opening of the program started in Edmonton in Canada, because this is a Vancouver-based company. And the CEO, Calvin McDonald, said of the loyalty program they're testing out that they can see its strength so far, that they think they have even room to raise the price point above this as they add more offerings. So they're going to roll this out in some more markets in the first half of 2019, and then also decide exactly what they want to offer these loyalty members going forward. But it's something to certainly pay attention to, as the broader retail industry is trying to create these experiential and loyalty program offerings to just encourage people to remain customers and add more customers, as companies such as Restoration Hardware and Nordstrom's offer similar services to try to get customers in the store and come shop online as well. And they also have the big giants like Walmart and Target that are just trying to test out different offerings in this age where everyone's just really focused on not getting burned by Amazon, especially on online sales, where they control so much of the market, especially in North America. So as I said, pay attention to this loyalty program going forward, and I could easily see that rolling out to all of their customers at some point within the next couple years. And then on top of that, they also mentioned that they are introducing a self-care line, which for those of you who don't know, because I actually had to look it up because I wasn't exactly sure what they meant by self-care, since it is a yoga company. I didn't know if it was treatment for, I don't know, stretching or something like that, but I guess it seems all too obvious that is actually more offerings that cosmetic you'd buy somewhere else at like CVS. So they're currently offering deodorant, dry shampoo, basic balm, a mask cleanser, and a face moisturizer. And they're offering this at in a handful of markets, including Chicago, Orange County, and Toronto. So they have 5 products at the moment, and then they're testing out more, and they plan to offer some more later on in 2019. And this is part of a larger effort for the company, as I said, to just expand into new businesses. And it highlights why companies such as Walgreens recently invested and partnered with this online cosmetics company that's more geared towards millennials called Birchbox. So companies like Lululemon feel that they can entice their clients who are already buying $120 yoga pants to maybe buy a little bit higher end cosmetic offering that is branded with that Lululemon logo that carries a lot of cachet and clout with their consumers. And then in terms of the actual outlook of the company going forward, I want to close with that. So in terms of the fourth quarter revenues, Lululemon expects that to come in between $1.12 billion and $1.13 billion, which falls relatively in line with analyst estimates that were expecting $1.1 billion, so that's solid there. And then in terms of earnings, they're expecting their earnings range to come in at $1.64 per share to $1.67 per share for the quarter, which actually did fall just a little bit short of estimates, which is kind of disappointing when you think that this fourth quarter is when retailers especially are supposed to see higher sales for this holiday and Christmas shopping season period. And then in terms of the full fiscal year 2018, Lulu now expects net revenue to be in the range of $3.235 billion between $3.245 billion. So growing big there. They're expecting their comparable sales to increase in the mid-teens on a constant dollar basis. And then their earnings to come in as high as $3.64 per share, with the low end at $3.61 per share. So solid long-term growth outlook as well. And then the company said it expects it easily expects to reach its goal of $4 billion in revenue by 2020, which is something that a lot of investors will continue to pay attention to going forward to see if they can hit that high bar they set for themselves recently. And then in terms of this overall athleisure wear, Lululemon as long as this stays popular, I don't see why Lululemon would not remain one of the top companies. They've easily come out. It seems, in my opinion, and in terms of market share growth, they're performing really well compared to giants like Nike and Under Armour, which hasn't done as well in this athleisure business, and then Adidas, and then Gap, who's really gone headfirst into this athleisure business, and then even companies like Puma, who are actively expanding, not just in the sportswear market in general, but in this athleisure market. And more specifically, the company, as I mentioned about the 2020 $4 billion revenue goal, Lululemon said they expect to reach $1 billion in menswear sales by then as well. So that'll be really interesting to pay attention to going forward, as their menswear business could prove to be a huge growth area as well. And then I also want to just touch a little bit on the stock price movement and their valuation, and then get into our exact percentage-based growth estimates to give investors a little bit more of a clear picture of where the company is headed. So as of Monday morning, Lululemon stock for the last 12 months, 52 weeks, is still up 54%. So the recent downturn has definitely hurt the stock because they were cruising along for an extended period of time, but they're still up 54% over the last year, which crushes Nike, which is up 15%, crushes Adidas, which is up just around 6%, and comes in well above the S&P 500, which at this point is now down 1% over the last year. So they're still doing really well in terms of their stock price movement, but it seems like investors maybe are just trying to take some of any of their gains, and maybe since the quarters sometimes represent a buying opportunity or a selling opportunity based on new information, that it seems like that Friday sell-off was just investors saying, hey, the stock has done really, really well over the last year plus. Maybe it's time to get out for now and then jump back in a little bit later on. And then in terms of their valuation, Lululemon is currently trading at roughly 27 times forward Zacks consensus estimates for earnings, which falls in line with their 5-year median, which is around 26.4. So relatively solid there, but they still are trading at a premium compared to their larger market, which is currently trading at 14.5 times future earnings estimates. And then in terms of sales growth and earnings trends, I have our Zacks estimates pulled up right now. So for the current full year, we gave those estimates out. The current full year, our estimates are calling for roughly 21.8% revenue growth. And then the following year after that, we're calling for a 13.5% growth. So slowing growth from their really strong fiscal 2018. And then in terms of their bottom line, our earnings projections are coming in that there will be 41% bottom line growth for the current fiscal year. And then the following fiscal year, fiscal 2019, our estimates are calling for 17.4% growth. So once again, it seems like fiscal 2019 will not be a huge blowout year like 2018 has been for Lululemon. But we should note that all of the earnings trends at this point, especially for fiscal 2018 and 2019, are trending upwards. So analysts are expecting earnings to be better than they had been within the last even 7 days, because they have a lot of estimates coming up recently within the last week. So we've talked a lot about their third quarter earnings, and it seems like there was nothing really, really shocking in there that should have sent the stock down so much on Friday. Nothing terrible, some slightly lower than expected guidance, and some growth that was a little bit slower in points than it had been recently. But it seems like maybe investors are seeing some downward momentum in the stock, as there's not massive growth projected in 2019 on top of this really strong 2018. But as I've said, it seems like as long as this athleisure trend stays on trend, which is almost impossible to predict with fashion because it's very cyclical and it can be very fickle as well. But going forward, it seems like Lululemon is still a strong company, certainly as they try to get towards their 2020 goals of this $4 billion mark. And the stock seems pretty solid at the moment as well. But we'll have to pay attention to Lululemon going forward because it doesn't seem like their insane run of success over the last year is necessarily going to continue in terms of positive stock price movement going forward. But that does it for another episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com.